All right, so today we had a little bit of a pushback in the market today. Today, some of the profits that we had over the last week pulled back a little bit. Technically, it was supposedly, if you're watching the news, we had a good day. So if we look at the Dow Jones, we'll just do Dow Jones average. If I can spell average. All right. It says the Dow surged 700 points. And so you think, okay, that's really a good day. But one of the things that we quickly found out was that most of the Dow, and you see they went up a little bit, most of the Dow weighting went up based on a few stocks. Microsoft and, where was it? Caterpillar. And there was, I think it was like 3 or 4 different stocks overall, just based on weighting. But if you look at the overall Dow, a lot of it didn't necessarily do great. It was pretty flat for the most part. So one of the things that I noticed today as we looked at my portfolio, it looks like there's a lot of red, but most of the red were just losses off of gains that we've had over the last week. So I didn't necessarily lose a whole lot of money. So I'll show you some of the stocks that we have that I actually have bought. So we'll take a look at Groupon, which was my free stock on Robinhood. And this one, I mean, it didn't cost me anything. I got it for free. On February 20th or 19th is when it fell, 177, and it's down 60% over 3 months. Down 26 over the last month. And so I'm still going to consider getting a limit order for this when it hits 85 cents. I think it's worth doing. I may pull it back. We'll see. We look at Red Robin. And overall, I'm still positive, 225 bucks. We lost 130 today, but I still got this at $6, and we're still living it at 870. But again, if we look at about a month ago, it's lost 67%. So it still has a ton to go, and I'm still in the black on this one. Eldorado Resorts, this one fell 20% today, down to 1230. I got it at 1206, so I'm still in the money on this by 30 bucks. And again, if we look at it since what I call Death Day, right here, it was at $70 a share. We're getting it at 12 if we decide to do it again today. So that's roughly about 5.5 times profit. So I'm actually reconsidering putting some more shares into this if it drops. I might put a limit order in at 10 bucks if it goes down to 10 bucks. The idea in this is it doesn't really matter what the price is. I'm not buying these for today. I'm buying these for later in the year when we start to see things open up and business goes up and the stock market comes back. You're not ever going to see $12.30 again. So if it gets down to 10, I'll probably sell a couple of these stocks that have a gain on it and then buy this at 10 and re-leverage that money. All right, Invesco Capital Mortgage. I'm still up 100 bucks, even though it went down to 20 today. And this company does residential and commercial mortgage-backed securities. So they basically buy mortgages off of banks that got turned into bonds. So again, if we look at where this was, February 20th, 1827, you're getting it at 350. So it's about 5 times the return. So we'll see what happens with this one. I have my eye on this. Invesco is a huge institution. They're not going anywhere. So there's a lot of security in that. MFA Financial, one of my all-time favorite scratch and dent stale stocks. This one I'm down actually 355, but at the same time I bought almost 1,000 shares on this. If we look at Death Day, it was at 804. It's now at 155. Geez, that's almost 6 times. It's 5 times. So I'm definitely considering selling some of the stock I have that's a gain to put some more into this. I mean, it's ridiculous. I can't believe I'm getting this at 155. So Cinemark, big movie chain theme operator, they're going to take it on the chin until they get things open, and then they're probably going to have, the nice thing about movie theaters is they can space people out. So you can literally let's say they let 30 people in the movie theater, you could open them up and then they just block seats off. So these are going to be one of the first people to open up, most likely. Hollywood has a ton of movies that they are waiting to put into theaters, and people are going to be itching to get out. So on Death Day, it was sold at 32. Right now you're getting it at 10, so about a little over 3 times what you're looking at. I got this at 6, and I'm still in the money, $700. I'm not so sure. We'll see what happens with this, but this one is probably in my pocket right now. Southerly Hotels. This is a sneaky good one. Kind of a mid-size hotel chain. They aren't really huge, like a Hilton or anything like that, but they've been around a long time. If you look at Death Day, February 20th, it was $6 a share, getting it at 160, so about 1/4, about a 4-to-1 ratio on that. And you just see it fell here, and it's just living flat. You can kind of ignore that. It wants to go up, and it's getting pushed down, whether that's high-frequency trading or mutual funds or what have you, I'm not sure, but it wants to go up. So if you look at the trend here, it's flat up. It's like a heartbeat. Flat up, down, and more than likely, you're going to see it go up again. So I have my eyeball on this one as a potential new one. So I might put one in at 150. I don't currently have any stock on this one, but I very well might consider going 150 on this. Let's say I put 500 shares. That would be $750, and a 4-to-1 ratio. I mean, that's going to earn $3,000 on that. So, all right. So let's talk about some stocks that I have on my watch list that we've been talking about. So Service Properties Trust. Again, this one does hospitality and travel services. They basically do the oil field. So they basically do food service and short-term hospitality and hotels for the drillers who are in the oil fields in the Permian Basin. And again, while oil is down, these people are going to be down. But once they go back up and start pumping, which will happen as soon as things start opening up, it was sold at $22.45. Right now you can get it at $5.70, so about a 4-to-1 ratio. So we'll see. I have my eye on this one. It's not the first in line, but it's one I am looking at. Ladder Capital. They do commercial real estate finance services. And right now they just don't know where things are going, and that's why you're kind of seeing it flat. They want to go up. See this jump here? This is right where the kind of stimulus, for lack of a better term, was done. But the question is how it's going to be implemented and how long it's going to last led this to go down a little bit. So this one went all the way up to $9.84, and you're now getting it for almost half that. So that's why you're seeing that 70% drop. I am definitely considering this. So if you look at Death Day, you can get this at $18.77. You're basically a 3-to-1 ratio for the most part. It's pretty good, but again, we were seeing 5-to-1 and 4-to-1. So this is a good one, but not up on my list. Ellington Financial, again, a real estate investment trust. They do basically mortgage-backed assets, and the same thing. You see, well, let's back up a little bit. So Death Day, $19. You get it currently, I don't know, $5.72. So it's about 7 to 2 as far as kind of what the payout is on that one. And if we look at the last month, it was kind of going down, but it wants to go up. If you look at this, let's back this off a little bit. Went down, it wants to go up. Went down, go up. This one's probably going to go down a little bit, and if it's going to go up. But 3.5 to 1 isn't really where I'm looking at right now. It's on my list, but it's not at the top of my list either. AMC's big movie chain, same thing, just a reminder. On Death Day, it was $7.60. Right now, you can get it for $3. It's about 2.5 to 1. Not a big enough payoff for me. This is just a safe money bet if you want safe money. But I want bigger returns than that. So, Full House Resorts, they do casinos. So again, we look at Death Day, and this was at $3.62. You can currently get it at $1.29, so about 3 to 1. Not bad. But again, it went down, and as the stimulus went up, and the casinos were part of that group, that's where kind of the hope of the buyout would be. And there was talk about opening the economy up early, but when other people said it might be later, you see it drop down. But this one, the trend line for this one is going up. So I would consider getting this, but 3-1 isn't as good as I want it to be. So I'm eyeballing it. And overall today, it actually went up 16. This was down for a while today. It was down 8%, but just like we were talking about, it went down to 101. There were probably some limit orders. It went up to 140. All right, so SeaWorld is one I wanted to take a look at today. It went down 15%. And look at Death Day. And it was at 35 a share. You can now get it for 11. It's basically a 3-to-1 ratio. Again, it went down pretty even. And as there was the bill that was going to basically bail some people out, it went up. And then when they realized they weren't part of it, it went down. And I think part of it was just the fact that there was also talk of getting people back to work and eliminating the shutdown. So this one went down, but just like the other ones, you're going to see it go up, go down, and you'll probably see the trend line go up again. So not bad. Again, if we look at this, $35, $11, a little more than 3.5 to 1, 3-to-1. It's definitely a safe money bet, and that one is going to make you money, but I want a little more than that. And then one my brother is watching. He's a pilot for an unnamed airline. Although I'll tell you, it's not this airline. So they were trading at $41 when all this went down. It's now at 12. So we're looking at 3.5 to 1. This is a little bit better. They're going down. And as a talk of basically the airlines getting the bailout went up partially with people getting back to work. When it got extended, it went down a little bit. So overall, it's on its way. Same kind of trend line that we see for everything else. This one was down 16% today, but it's an opportunity to get it a little bit lower. Again, we're not rooting for these to go up in the short term. We're rooting for them to go down. So overall, lost money today, but really it was just a pullback on the profits that were there from the stocks that we have. All I'm looking at this, I'm not looking at this as a return saying, okay, this is what we're looking for. When there are days when we make money, that's great, but that is not the focus. Really, the focus is trying to get the most value, trying to buy these stocks for as low as we possibly can, seeing which ones have the greatest chance to go up in the greatest degree, and trying to buy stocks that are basically insulated, whether it's lobbying or they've been around forever or they're just, megaliths and they don't have the competition. So good example of that, Cinemark and AMC are going to be there. A smaller theater is probably maybe not going to survive, but the AMC is not going anywhere. So some things we're looking at. I'll give you an idea of some things I'm going to look at tonight as far as what I want to buy. But overall, I'm going to be looking at ones where I'm still in the money and trying to find opportunities for some stocks that I'm watching where the price is just down low and I just can't resist. So I'll cash some out where I'm making some money, and then I'll reinvest that into some stocks where, the opportunity is just super easy. So that will be happening tonight, and I will talk to you tomorrow about what I decide to do. Until then, see you later.